Hey guys, it's Carter. Welcome back to the channel. I hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the 5 swing trading myths that I am going to be busting. Some of them are going to be true, some of them are going to be myths. So guys, I hope you guys all enjoy it. And if you guys are like, who is this random guy on YouTube? My name is Carter. I've been a full-time trader in the stock market for over 6 years. I specialize in swing trading, where that's pretty much I'm buying a position and holding it for a couple of days or a couple of weeks, depending on the stock and strategy. And one thing that I do think is important, guys, is I do have an amazing school where I do teach people to trade stocks. And I know that sounds, scammy, and, when people think of YouTubers selling a course, they cringe. But guys, I'm telling you, it's different. We have live streams, private live streams, a group chat, quizzes, lectures. I don't believe in alerts or anything like that. I teach people the process of learning to trade and the strategies and how to find stock and stuff like that. So check it out. You guys can use code YouTube, all caps, to get 20% off. So it's super, super exciting. But let's jump into the top 5 swing trading myths and talking about if they're true or if they're false. So the first one is swing trading or trading in general is a scam. Now, the reason why a lot of people think this, in my opinion, is because they think, they think of all these YouTubers or all these people online that are making thousands of dollars, turning $10 into $1 million. Guys, most of them are fake. Most swing traders online or people online are completely fake. Those people that say, oh, learn to swing trade in 30 days. No, that is not real traders. Real swing traders, in my opinion, they've been in the market for a long time. They understand the process, and they understand, not trying to turn $100 into 100,000. They focus on base hits, those 1, 2, 3% returns. That's where 99% of successful swing traders live for. In my opinion, I never try to make 30 or 100% on, each and every trade. That's a recipe for disaster. Your risk and reward is going to go right out the window. And, I think that there's this huge misconception that everybody online is a scammer that's trying to get people's money, but no, there's a handful of good traders out there, and it's all about you guys to do your research and make sure they're kind of legit. But guys, swing trading in general is not a scam. It's just the traders, in my opinion, that kind of make it a little scammy. But all right, the second myth here is going to be swing trading is easy. I think that this is a super common one. I think most people don't think it's easy. But I do think a lot of people start trading too soon, if that makes sense. I do think people understand that, there's all these studies that 80% of swing traders and day traders fail and 20% succeed. But I do think that most and majority of traders know that, but they just don't want to invest in education and time and practice. The biggest recommendation I could give a new trader that's just starting isn't to fund an account. It's to honestly focus on education. The more you learn, the more you're going to earn. Start paper trading, which is just simulated money, just to practice your entries, your exits, and your risk management skills. And honestly, after you do that, then I would just do one share and slowly introduce capital before you guys start trading with the thousands of dollars. Because I do see a tendency of people that paper trade versus success. I do see a huge correlation between people that paper trade for at least a year and their accounts growing, rather than people that just paper trade for 30 days and they struggle. So invest in that education. Understand it's not easy, but you guys can definitely do it if you just put in the hard work. But all right, next thing, number 3 is only experienced day or swing traders succeed. And it's kind of true, and the reason why I say that is it's just like any career. It's the more time you have in a certain industry, the more educated you are, the more practice you're going to have, and you're going to be just a better trader. So there is a huge correlation between experienced traders that make money and beginners that don't. Nowadays, a lot of brokers make it super, super easy to fund an account and start trading that single day, which is good, but yet bad at the same time, because you can blow up an account in a single day. It's just very, very risky. So just focus on education before you guys even fund an account here. The next thing, number 4 here, is going to be all you need is technical analysis. So with trading, most swing traders, most day traders really just use technical analysis. So it's using patterns and indicators and scanners to get a general idea of where the stock is at and where it can go in the future. Now, this is not the case. In my opinion, I think anywhere from 80% of trading in general comes down to emotion. Emotion is a very, very important thing when it comes with trading in the markets. And the reason why is because when you buy a position, you can have a variety of different emotions. You could think that that stock's going to the moon, and you could be super hopeful. You could see red and get fearful. You could, get FOMO. You see your friend buy a stock at $10, now it's at 20. You hop in at 20 and it sells off, and you're like, why did that happen? Emotions are super important, and that's why just slowly introducing capital and just practicing is going to really, really help you. Some of the tips that I would recommend doing is having a clear-sighted plan before you guys even make a trade. Each trade should represent, in my opinion, because I used to play football back in the day, each trade should represent, a game. Now, do you go into a football game without a playbook? No, you don't do that. You'll lose the game. You got to have that same approach with trading, and if you don't, it's a recipe for disaster. The last and final myth here is swing traders only buy the dips of every stock that sells off. That's not the case. What at least I look for, I do buy dips. I'm not going to lie. Buying dips is always historically has been a great opportunity to buy stocks at a very, very affordable price. Looking back at recessions, 2008, 2020, early 2000s dot-com bubble, and a variety of other crashes, historically that has been the best time to invest and trade the markets because you're buying these stocks just at a cheaper price. But in general, just because a stock sells off doesn't mean you should necessarily buy it. There's always a huge reason. There's always a reason why a stock is doing something. You just got to learn what's going on. And whether it's an earnings report, whether it's bad news, bad publicity, something's going on. So do your research before you guys ever place a trade. Understand what's going on inside that company and seeing if there is going to be a turnaround in it. And so guys, overall, swing trading is a great way to start making money, but it's not easy. It definitely is just like any old job. It's definitely glorified on YouTube and online because people make a bunch of money off it. But there's, in my opinion, a huge misconception that swing trading is for young people that are gonna make $1 million today. It's not the case. Focus on education, and you will be way better off if you guys just treat it like college. Take a year, 2, 3 years. Focus on that education aspect, just like a doctor or an engineer before you guys place a trade. And I will almost guarantee that you'll be in a way better off situation with trading. But guys, this is everything you guys kind of need to know, and some myths that I hope you guys enjoyed. So subscribe, and we'll see you guys in the next one. Don't forget to check out my swing trading school, and we'll see you guys later. Take care, everyone.